Alphabet stock is down 33% off its highs, and in this video I'm going to talk about why you're going to regret not buying this stock on the dip before a market rally. So let's get started. First, Alphabet has done an excellent job growing revenue for nearly 2 decades. You look at this chart here for annual year-over-year revenue growth, and Alphabet has stayed above 12% for most of the last decade in terms of revenue growth, only falling below that in the last year at 9.78%. But that's following a year where it exploded more than 36%. So it's understandable that the year following a surge, you would have a bit of a pullback, and that pullback is still not far below its long run average trend. So it's done an excellent job. Of course, in the near term, there is some pressure to the digital advertising industry as enterprises fear and worry about an oncoming recession, and so they've pulled back some spending. And then there's some inventory troubles that have happened over the last 6 to 18 months. And of course, if you don't have enough things to sell, you're not going to advertise, right? Why attract customers to your stores if when they come to your store, they're not going to find something to buy? So that's another reason why ad spending has pulled back in the recent year and a half or so. But that trend is that headwind is short term. So it's gonna get resolved. It just means, is it gonna get resolved in the next 3 months, in the next 6 months, or in the next 18 months? That remains to be seen, but it's likely to be resolved, and then Alphabet, in my opinion, will return to its long run trend growth rate. The company has a dominant position in search engine. Google search has over 80% market share worldwide, and many of our purchasing decisions start with a internet search. So for that reason, Google has a dominant position in an extremely lucrative area. And then if you're not going to search Google for when you're thinking about buying something, the other thing you might do is you might go on YouTube and look at product reviews. Who owns YouTube? Alphabet. So either way, which direction you go for looking at researching what you want to buy, Alphabet has it covered. And so if you're a business, of course you want to get your product or service in front of those people that are searching up similar products and services. You want to tell customers, hey, our product is available. Buy from us, not from our competitors. And I'm willing to pay money to get that message across to the millions and billions of people that are on Google search and YouTube. So it's an extremely lucrative area. Alphabet has a dominant position in this area, and I would like to participate in that business model. Right? It's just so beneficial to be in that space between the consumer and the purchase decision. The other reason why I think Alphabet is an excellent stock to buy right now is not just the fact that it's generating a lot of revenue and revenue growth, but the fact that it's doing so very profitably. You look at its operating profit margin over the trailing 12 months, and we look at this metric across the last decade, it consistently held above 20% while fluctuating up and down, but still above 20% for the most part. And to make this metric even better, Alphabet in 2023 has started laying people off, cutting costs, becoming more focused on its core business, and focusing more on profitability. I feel that's going to be accretive to its operating profit margin over the next several years. It should, excuse me, it should be higher because of those cost cuts, because of those efficiency improvements. Another reason why I love Alphabet stock right now is its cash flow from operations to sales. The ability for Alphabet to turn sales into cash flow is really, really strong. You look at this 32.35% in the most recent trailing 12 months, but you look back in the last decade, it's held consistently above 30%. Not only is it generating very good profit margins, it's also generating very healthy cash flow from operations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And lastly, the stock is not expensive. It's not expensive. The pullback in the share price of 33% has brought its valuation down to a forward price to earnings of just 16.55, the lowest it's been going back a year, near the lowest it's been going back a year, and it's truly inexpensive for a company like Alphabet that delivers revenue growth at very strong operating margins with a strong business model with a strong competitive advantage. You're not likely to have this kind of opportunity in Alphabet stock again. So that's why I say you might regret not buying this stock on the dip before the market rally. If this stock rallies and shoots higher, you might regret not buying and owning this stock going forward. I will say I do own this stock. This is one of the stocks in my portfolio. It is one of my favorite stocks. It's one of I made a video to begin the year, my top 23 stocks for 2023. Alphabet was included in that top stocks to buy for 2023. So several reasons why I like this stock. I hope this video has highlighted that. And that's all I've got for now. Of course, if you want to see that video, I will link to it at the end of this one. It should be popping up on your screen right now. So please click on one of those videos and I'll see you over there.